Hello, traders. Just want to make everyone aware of a partial lunar eclipse. WD Gann, a lot of astro traders pay attention to these eclipses. I've been talking about mid-month. In the next couple of weeks, I think we're reaching some important inflection points that could post turning points for potentially the rest of the year. So I've broken out my telescope and we're looking at the S&Ps now at 3010. Last several weeks or so, I've been talking about the big round number of 3,000, talking about the potential of 30 to 50. No one knows how much a rubber band can stretch, but this is a blow off or at least a correction, which you'll understand my fundamental rationale when I get to 10-year yields for my third entry for today. If you look at the bottom of the chart, you could see that in 2018 we had our last confirmed high, and then we had another new high. The RSI didn't confirm. And look at the RSI right now. If you look all the way to the right at the bottom at the blue RSI, there are glaring divergences, which also appear on some weekly time frames, daily time frames. So think that this market could be vulnerable for a correction, maybe even back to that red line that's going to come in under 2200 sometime later this year. So looking at the S&Ps, it's pretty much a given. Everyone's expecting at least a quarter point cut by the Fed at the end of the month. Perhaps we get a top prior to that and a sell-off, and then the market rallies into the Fed, either makes a marginal new high or failing rally, which would even be more bearish. So on the alert for a turn inflection point in the S&Ps over the next couple of weeks, perhaps around the eclipse or next week, and an initial sell-off. Again, a very important numbers at 2960 that I pointed out last week is going to be a pretty good piece of evidence that you could present to a bear case and the beginning and the ensuing of a correction. The next market I want to talk about is with all the euphoria in gold. If you really look at it on a longer term basis, you look at this gold from the high at 1900 in 2011 to the low in 2015 of 1046, we're just a little bit above 38%. So with all the headlines and everything, I think there's potential perhaps for one more new high, possibly 50%, 1483, 1500, based on the triangle breakout that we've had. Say the range of last week would take us there if we took out last week's highs, which I think is possible because RSI did not diverge on this 1 to 2 week pullback we've had from the recent highs at I believe it was 1438-ish, 1440 in that neighborhood. So this too could be vulnerable to a top. A lot of people very long this market looking for a crash in the dollar. I don't think it's going to happen yet. In fact, you guys know I've been bearish a dollar, and I think that this sell-off is going to end, and then the dollar heads up, rips higher. And part of the reason could be my last contribution, and it's the monthly chart of the 10-year yield. Now we're putting in a pretty good month. If you look at the last candle, we have a reversal month to the upside working halfway through the month. I really think the biggest surprise to the financial markets this summer and fall could be yields rising while the Fed is easing. So we're back inside the falling wedge on the 10-year yield, and I think it's going to have trouble at least on the first attempt between 220 and 235. But if we get through 235 and you look at this long term, why can't we, with the rules of a falling wedge, retrace this whole decline from 3.25? And that may not seem like a big move, but that's a 50% move in interest rates when you have all of these markets delicately balanced by central planners. A 50% increase in your interest cost can really do throw a monkey wrench into financial engineering. Remember, don't just count your pips, count your blessings. Good luck this week. Adios.